friends, in this video we would talk about the process of claiming refund of taxes under goods and service tax. Basically, tax refunds refers to any amount that is due or returnable to the taxpayer from the tax department. There are specific scenarios in which refund is allowed, or dealer can claim tax refund only in these scenarios, such as when we pay payment of taxes, when we unutilize input tax credit because of output supplies being export, rate of tax on input being higher than the rate of tax on outputs. That is also called inverted duty structure. So these are the scenarios wherein the tax refund is due, and in this PPT we would understand how we can claim that tax refund under GST. What is the current status? So under excise, refund is allowed in case of tax paid on purchasing goods which have been exported on inputs, or input tax has been accumulated due to output being exported or zero rate supplies. Under VAT also, VAT is paid on purchased goods which has been exported. Also, VAT paid to purchase which has been exported, and excess input in case wherein exceeds the tax payable on sales in a month, or excess credit will be carried over to the net financial year. At the end of the financial year, dealer has an option to claim refund or carry forward. Tax also, refund is allowed in case of excess service tax paid, where the excess amount paid cannot be adjusted against a future liability. When there is an accumulated input tax credit used in providing an output service which has been exported without paying service tax. Now, in the GST regime, what it says that tax paid on inward supply of goods or services which have been exported, or input services used in goods which has been exported. Note, if the goods are subjected to export duty, refund will not be allowed. So basically, taxes paid on any input of supply or services wherein the output is exported, or inputs goods wherein the output service is exported. However, if there is an export duty on the export, then there will not be any refund. Or unutilized input tax credit due to output supplies being export. There is unutilized tax input because there is an output export. Or there is an unutilized input tax due to inverted duty structure. Inverted duty structure is a duty structure wherein the tax on input is higher as compared to tax on output. In the current regime, this is not allowed for refund. This is very interesting. However, in the GST regime, this scenario is eligible for claim of tax refunds. Refund is not applicable when supplies are nil, obviously rated, or fully exempt. What is the application for refund? Now, person claiming refund of tax must file GST RFD1 within 2 years from the relevant date. The relevant date is mentioned in the table in this. If you are exporting by sea or air or land or post, or services exported where service has been completed prior to receipt of payment, unutilized tax credit. There is one thing very interesting to note here, that a claim for refund of the balance in the electronic cash ledger must be made through the relevant monthly return. So if you do not file GSTR 3 in case of regular dealer and GSTR 4 in case of composite dealer, then application of refund is not possible. What are the documents which are required to claim refund? The person needs to file a declaration wherein the refund amount is less than 5 lakhs. Self-declaration certifying the incidence of tax and interest that has not been passed on the other person. If it is more than 5 lakhs, then documentary evidence is also required that the amount incidence has not been passed on the other person. What is order of refund? So refund on account of export. If the refund is on account of export of goods or services, the authorized officer will refund 90% of the total amount claimed as refund as a provisional basis in form GSTR RFD 4. Thereafter, a due verification will happen. The officer will issue an order for the final settlement of refund. Please note that if the if there is a provisional refund will be granted subject to the following condition: the person claiming refund has not been prosecuted for tax evasion for an amount exceeding rupees 250 lakhs during the preceding 5 years, and the person's GST compliance rating is not less than 5 on the scale of 10. So the GST rating becomes very important, and there is no pending appeal review on the amount of refund. There is another point wherein if the officer is satisfied that the whole or part of amount refund in the application is refundable, he will issue an order in GST RFD 5. This will be done within 60 days from the date of receipt of application. Another interesting point, less than 1000 rupees, there will be no refund. Exceptional scenarios of GST refund. This is wherein the tax on the supply of goods regarded as deemed export, for example, supply of goods or services to an SEZ or a EO unit, because they are deemed to be exports. Tax is refundable as a consequences of judgment, decree or applicant tribunal, or tax has been paid on a supply which has not been provided, either wholly or partly, for which an invoice has not been issued. For example, a supplier has received an advance from recipient on 28th of November for supply to be made on 20th December, but which finally did not take place owing to disagreement. In that case also GST refund will be allowed. Exceptional scenarios for tax wrongly collected, deposited with the central government, or IGST paid on supply of goods to tourists traveling out of India. If the goods are taken out of India, the process of claiming refund remains the same. These are the relevant date, and this is how we can claim GST refund in case of exceptional scenarios. So these are the exceptional scenarios which has been stated. This PPT ends here. This PPT was regarding how to claim refund under the GST regime. We will come up with more videos and PPTs and blogs on this topic. Please feel to write to us or call us for any query on GST, and we will be more than happy to help you in this regard.